Good evening, everyone. Let's just give 2 more minutes for the other people to join in, and then we'll start on the webinar. Good evening, ladies and gentlemen. I'm Hassan Media, Manager, Corporate Finance and Strategy. And on behalf of my team, I would like to welcome all of you for the first Sunshine Holdings first quarter results for FY25. So to start things off, few housekeeping announcements. As usually, this webinar will be recorded and will be later uploaded along with this presentation to our IR website, as well as the CSC website for your reference. So you can use the mentioned link to access our IR website as well. So all participants will be muted on entry to the webinar. And during the Q&A session, you can use the raise hand option to ask questions, and I will unmute participants as required. If not, you can also use the chat box function to type in any questions that you may have. So this time around, there's a bit of a change in the presentation format. We wanted to revise the format and give a little bit more detail about the sub-business segments within the three main sectors. So whatever the market details relating to market dynamics will be in an appendix section. So the idea here is to provide investors with a detailed insight into each of these sub-business segments. So the presentation will start off with group highlights for the quarter, followed by a deep dive into each of these sub-business segments from respective business heads and explain their business performance and for the quarter. Then we'll end with a Q&A session. So to start things off, let me first introduce my team. So we have Mr. Vish Govindasamy, Deputy Chairman, Sunshine Holdings. Mr. Shyam Sathasiva, Group CEO, Sunshine Holdings. Mr. Arunadipti Kumar, Group CFO, Sunshine Holdings. Mr. Hiran Samarasinghe, Chief Growth Officer, Sunshine Holdings. From the respective businesses, we have Mr. Shantha Bandara, CEO of Pharma and Infinity Division. Dr. Thiru Sayandar, CEO of Medical Devices and Pharmaceutical Manufacturing. And Mr. Farman Nizar, COO of Healthcare Pharmacies. On the consumer side, we have Mr. Anuruddha Ravihar, CEO of Consumer Brands, and Mr. Sanjeeva Sannapala, CEO of Sunshine Tea, which is the export arm of Sunshine Holdings PLC. So to start things off, let me quickly cover some of the corporate announcements during this quarter. So first of all, on July, Fitch Rating affirms Sunshine Holdings AA+ rating with an outlook, stable outlook. So one of the key rating drivers here is that Sunshine Holdings' steady business profile, along with this backing from cash flows from defensive industries such as healthcare and healthcare, manufacturing, and consumer segments. So another key rating driver for this rating affirmation is Sunshine Holdings' strong balance sheet position, So which as of first quarter FY25 is about 27% geared debt to capital. Then quite recently, which is last week, Board of Directors of Sunshine Holdings decided to amalgamate 100% owned subsidiary Sunshine Packaging Lanka Limited. So the purpose of this amalgamation is to streamline the reporting structure of the holding entity. Given that this company is has very minimal operational activity, it practically makes more sense to integrate the operations of this company into the Sunshine Holding company. So as a result, Sunshine Holdings will amalgamate all assets and liabilities of Sunshine Packaging Lanka, and the resulting company would be Sunshine Holdings PLC. So with that, I would like to hand over the proceedings to Mr. Shyam Sathasiva to take you through the group highlights for the quarter.
Perfect. Thanks. Good evening, ladies and gentlemen. Thank you for joining our first quarter earnings webinar for Sunshine Holding results. The group has had strong results for the first quarter. We have revenue growth of over 6.5% to 14 billion, driven primarily by our healthcare segment, which is over 50% of the total revenue. Had a very strong first quarter versus last year, 19.8%, nearly 20%. This is driven by some one-offs as well. Last year, same quarter, had a bit of a dip, but overall we've seen positive momentum, especially in our pharmaceutical manufacturing business. And the healthcare team will take you through more of those details. We had challenges in agri sector, primarily driven by the drop in palm oil revenues due to the lower pricing. Hopefully, that will move forward into the next few quarters. Primarily, our earnings, we've had 2.9% growth in our EBIT to 2.1 billion, which cascaded down to an EPS growth as well of similar. So those are our earnings for the first quarter. In terms of significant achievements during the quarter being our return on equity of nearly 28%. This is significantly higher than last year's same period, and we hope to continue to focus on high returns for all shareholders. The market cap has moved in both over and above market as well as in line with our results, and we've seen an interest in the shares and therefore driving PER as well. We hope to continue on this momentum. If I take you through more details of the financial results, like I said, we've had growth in our revenue. Our GP has been about 29%, which is sort of held. We've had some challenges in EBIT and PAT. This is to do with both the agri and consumer businesses, both having lower results in both areas. But what we continue to see is the fact that EBIT is something that we want to see keep improving for us. And that's where the focus has been on results for the business. Primary drivers, if I go into movement in revenue and EBIT, of course, is revenue is driven by healthcare as well, both in revenue and in EBIT. We've had some challenges, like I said, in revenue and agriculture, as well as in terms of EBIT, is consumer has had a much tougher quarter one versus last year's same period. The business is broadly continue to contribute in that direction, as mentioned earlier, of 50% plus in healthcare. What we're driving for is unit growth across businesses, and that's the focus. Let me hand over now to our group team who manage each of the sectors. Let me start with Shanta Bandara, who will take you through firstly an overall view of the healthcare sector and then specifically into each of the businesses. Thank you.
Thank you, Shyam. Good evening, everyone. Let me take you through the overview of the healthcare sector. You can see the detailed overview here. I'm happy to say that Sunshine Healthcare sector is the Sri Lanka's one and only fully integrated healthcare company. It encompasses throughout the entire value chain. So let me take you through some of the details of our business involvement. We are in manufacturing and R&D. So we were the first respiratory care research and manufacturing facility producing inhaler devices, the MDIs, the meter-dosed inhalers. And we are in different lines as per se in capsules, tablets, and nasal sprays, and also the ventilator, the device, and creams, and the MDIs, as I said, and supplying largely to government. And also we have improved our brands into the local market. And the importation business is largely to do with agency business, which we have two segments in the business, which is pharmaceuticals and medical devices. We hold 12.7% market share in the pharma private market and house nearly over 75 principals from around the world. You may see some of the leading brands. We are number one in insulin in the private market, and also a main supplier to the government, Novo Nordisk from Denmark. And we house agencies like Siemens, 3M, Johnson & Johnson. Those are well-known brands around the world, GE Healthcare. And also we are in retail, very focused in the Colombo district with 15 outlets. And I'm sure some of you all have been to our retail outlets. It is similar to a Guardian or Watson that you see in the Southeast Asia. And we are taken as a leading healthcare and wellness chain in the country. And also we are into last mile distribution. It's a fully fledged distribution division that we have embarked into about 4 years back, handling the last mile to all potential manufacturers and importers. And we are able to cover the entire pharmacy universe in the country, and able to service sales and distribution services to our clients. And also you may see the revenue split in all, as Shyam said, the healthcare business is 53% of the group, and out of which about 63% is the pharma business, and devices 14%, manufacturing is 15%, and retail 8%. And you may see the asset split almost closer to the revenue split, the asset investment intensity. And also Q1 results, we are 7.6 billion revenue in Q1 this financial year with a 15.1% EBIT margin and 9.4% PAT margin. So moving on from the overall overview that you see there, the healthcare sector performance, you may see the last 5 quarters, we have been very stable and able to achieve overall 19.8% year-on-year growth for the sector. And as I said, EBIT has improved by 30 basis points from year-on-year Q1 to 25. And looking at overall PAT margin, that we were able to deliver 9.4% for Q1. Moving on from the sector to the pharmaceutical division, again, quite stable revenues that you see. Year-on-year growth is around 14%, whereas we are very happy with the overall volume growth, almost 28% by Q1. And also the volume growth is stable, that we see that we are able to capture some of the areas that we may have missed out in Q3 in the revenue graph, as you see. Moving on to the distribution business, again, being stable in our revenues, overall 18% growth with a 28% volume growth again. And you may see that against Q4 also there's a slight growth, so that generally Q4 becomes the highest quarter in a year. But in Q1 in financial year 25, we were able to almost match the Q4 results. With that, I would like to hand over to Sayandan, who will take you through the devices division and the manufacturing division performance. Sayandan, over to you.
Thank you, Shantha. So, ladies and gentlemen, taking you through the medical devices segment of healthcare business, we had a revenue performance of 1 billion, And it was a good quarter for medical devices, because why I say it was a good quarter for us is this was the year, or this was the quarter we started regaining our volume share loss which we had in the private sector last year. So if I may share with you the volume gain compared to the trailing quarter, the Q4 quarter, we had a 9.3% volume growth. And compared to that of corresponding quarter last year, Q1, we had a 7.4% volume growth. So it was a positive sign where the business is concerned, where we were regaining our volumes. But in the revenue chart, you may see a 20% drop. The main reason is that because of last year's same quarter, we had a project sale, a special project sale of 334 million. Because of that, on record purposes here, you see a 20% drop. But if you take that off, still the value has grown by 6.4. But the key feature had been the volume growth, which helps us to stabilize some of the key agencies such as 3M, Johnson & Johnson, and Siemens Healthineers. So these are some of the key highlights of the medical devices performance in the Q1. Moving on to the pharma manufacturing, which is our Lina manufacturing of the Sunshine Healthcare. As you can see, we recorded for the very first time a billion sale in a quarter. This is ever the highest ever performance that we have ever did in the past or the history of the Lina manufacturing. And this mainly comes from the highest supply of the meter dose inhaler, as Shanta initially pointed out, where we performed the highest utilization, or the capacity utilization. We are working 24 hours. We produced the maximum capacity and supplied the maximum of this year's order, which helps us to perform. So, which is supported by the further capsules and the other devices in the respiratory segment. So this was a stellar performance with 104% growth over last year first quarter. So these has been some of the key highlights of medical devices and the pharma manufacturing. And to take you through the retail segment, let me hand it over to Farman, my colleague, who will take you through the HealthGuard pharmacy.
Thank you, Sanand. Good evening, ladies and gentlemen. So the HealthGuard retail business, as you can see, the quarter one is a very stable performance compared to quarter four. And I think this was previously mentioned, quarter one, typically there is a few percentage point drop. But for this particular quarter, we have actually done well with a 10% growth in revenue and 14% growth in volume. The profit growth also was very healthy. During this period, a lot of initiatives were taken to see how we can organically become more stronger. One is from the customer service that the business does, as well as expansion. End of last year, we actually added our 15th outlet, and early last year we added an outlet before that. So we have a new outlet in Havelock City Mall, as well as we have another outlet in Bambalapitiya Duplication Road. The outlets are actually doing well. It's progressing. From Q4 to Q1, we see good progress, and we hope those will be very good additions going forward. Quarter two has a strong plan, and we hope to actually outgrow the number that you see here. So with that, I will just move it to now to Sanjeev.
Yeah, thanks, Farman. Sunshine Consumer Brands and the Sunshine Consumer Brands, we remain as the market leader for tea. It's around 50%, including of modern trade. In confectionery segment, we are remaining as still market leader for hard boiled candy with a 26% market share. Export will touch upon in my colleague Sanjeev in a while. So talking about highlights of Q1, overall market of tea was declining last year, but now it has settled to about 10% from 12% last year. And volume has grown by, overall volume has grown by 3%. Of that, branded volume of tea has grown by 5% overall, and unbranded remained same versus the previous year. Household consumption has improved by 2% from 0.24 kg to 0.25 kg in household consumption. And revenue, we have the VAT impact is reflecting on Q1 versus last year Q1. Moving on. So talking about tea performance of SEL, we have recorded a growth of 2% in versus trailing quarter in terms of versus last year we are declining on tea, but with the trailing quarter we are maintaining the same volumes as last year, despite challenging consumer this thing with the prices that we have at the moment. So 11.3% decline on year from sorry. Sorry, despite challenging the consumer sentiment, the tea brands, whatever, Ranthada demonstrated resilience with mid-teen volume growth year on year. However, from Q4 to Q1, we have recorded same growth Q4 to Q1. And tea prices are challenging for the upcoming quarters. Tea buying prices, but we need to remain competitive with the market price for upcoming quarters. Moving on to confectionery. So confectionery, we have taken some challenges. We have taken some changes done in the execution front in terms of sales. So that has resulted in initial teething issues that has resulted low achievement in Q1. But we have put things in place in terms of launches, relaunches, and also field execution strategies in place to have a great Q2. And that resulted in starting with an average Q1 turnover of about 171 million. We recorded 250 million sales in July. It's too early to comment on the success, but strategies are in place to continue in average basis 250 million in Q2. And with that, we will be regaining our lost market shares in terms of confectionery as well. I will now hand over to Sanjeeva for SST update from Sanjeeva. Sanjeeva, over to you.
Thank you, Anuruddha. Welcome everyone for the SST Q1 performance, the export arm for Sunshine Holdings. Let me take you through the Q1 performance. In Q1, we have done well in terms of year-on-year performance, well as the quarter-on-quarter, previous quarter performance. We have, in terms of revenue, increased by 31% against last year and 13.8% against the previous quarter. In terms of volume, here again, we have increased our volume by 24% against last year, Q1, and against the previous quarter, 13%. So we see a steady growth for this financial year Q1. This is mainly stemming from the interest and the increased business coming from the Middle Eastern region and also the US market. Most of our main clients from the Middle Eastern market has shown interest and growth in packing here in Sri Lanka. So even the Q2, we see a lot of demand coming in terms of orders. So we feel that even Q2 should bring in good results for Sunshine Exports. Thank you. I will now hand it over to Watawala Plantations.
Thank you and good evening, ladies and gentlemen. I will update you on the first quarter results of our agri sector. Watawala Plantations primarily engaged in the manufacture and sale of crude palm oil and dairy farming. As you know, palm oil sector has 3,400 hectares and it is the largest palm oil plantation in Sri Lanka, which is also the only plantation that is RSPO certified. In our dairy segment, we are the second largest dairy in Sri Lanka with about 1,600 total herd and about 735 milking. Moving on to the total sector, we had a 2.1 billion total revenue for the first quarter, and which is a contraction of about 12% year on year. And this contraction mainly stemming from the palm oil sector, and it is due to the lower crop and lower price realized during the quarter, as Shyam mentioned at the initial stage. However, we've been able to continue to improve our GP margin to 46.4% over last year, and this is coming from better performance from our dairy sector. On the palm oil sector, as I mentioned, mainly the lower performance is due to the drop in crop, and this is mainly seasonal, and we hope to catch up during the second and third quarter during this year on the crop. However, unfortunately, the pricing is continuing to be a challenge. This is mainly due to the ban on crude palm oil imports and new planting, as you know, and there is cheaper duty on the coconut oil import. Therefore, the prices continue to be challenged, but this is something that we are continuously working on. As for dairy, we had a reasonably good quarter. There was a lack of milking cows due to the lagging of the new herd coming in, and this will now improve in the second and third quarter. Therefore, there was a lack of volume. And the prices are again due to availability of fresh milk. There is a challenge on prices, but we are continuing to make sure that we improve the prices going forward. But overall, the dairy sector had a better quarter of the last quarter. Thank you.
Thank you, team, for all the detailed insights and highlights into each of the sub-business segments. So with that, we can move on to the Q&A session. So as I mentioned in the start, you can use the raise hand option, and I'll unmute you. You can ask your question. If that's not possible, you can use the chat box to type in your questions as well. To answer? Yeah. I'll read the question. Sorry. The first question is from Adam Smith. Revenue and profit wise, how does HealthGuard Havelock City compares with HealthGuard Shanghita? Are mall pharmacies more profitable than standalone drugstores? Farman, if you could answer this.
Can you just repeat? I lost the first part of the question. If you can please repeat.
Sorry. Revenue and profit wise, how does HealthGuard Havelock City compare with HealthGuard Shangri-La? Are mall pharmacies more profitable than standalone
drugstores?
Healthcare Shangri-La is actually doing higher than Havelock. And one of the reasons is because it had an entry a few, 1 year before Havelock came in. Havelock is actually doing very well. We had actually had a growth of about close to 20% from March to July in the Havelock city. One of the reasons is also because the Havelock city, in terms of the mall, all their anchors were not installed. So they are in the process of ensuring that all the other facilities of the mall are being implemented. So Odell has just opened up some of their theater facilities is just opening up. Some of the other fashion stores have just been launched for quarter 2. So with that, there is higher footfall that is being invited, and that is really helping us. That's number one. So in terms of performance, I think Havelock will catch up in about a year. It will catch up to what OGF is doing. In terms of a mall business versus a standalone community pharmacy, at the moment we find that the mall business can compete reasonably with the community pharmacy business. However, it is not the case for supermarkets, but for a mall we see potential. Yeah.
Thank you, Farman. Another question from Adam. Given the seasonality and the fact that you have already had a bumper Q1 in healthcare sector, how do you expect Q4 this year to be?
And so I think overall from a healthcare sector, since we're diversified across multiple segments, manufacturing, retail, agency as well, and we have government and private, it will vary quarter on quarter. We still have lots of potential going forward. The years started for us. The government supplies are, of course, calendar year. So Jan to June is more of a peak than the second half. But we see new products coming on stream and further growth.
Thank you, Shan. Another question from Shan. When is the capacity expansion from IFC funding is expected to take shape?
Sure. So on this, what we have is, as we announced, the IFC will be investing significantly into our healthcare sector, and majority of the funds will be for Lena Manufacturing's expansion. Some of the expansion is already ongoing, and we are seeing results of that, which are debt funded, which will then get, equity will kick in. So things are already in progress.
Okay. Another question from Adam. To what extent are Ozempic and comparable trending weight loss drugs being used in Sri Lanka? What is the market outlook for these medications? And will the government be involved in procurement or price control of these drugs?
We would all like these products to become available at some point. At this point, Novo Nordisk, our manufacturer, is facing significant global shortages, both in their traditional markets of the EU and the US itself. In the next couple of years, we don't see these products being launched in small markets like Sri Lanka. And regulatory simplification will be required before these things come on board. So long way out, I would think.
There's a question from Tarushi. Hi. We can see a significant volume growth in Sun Pharma business, whereas the market leader mentioned that there are drag on their pharma volumes due to negative market sentiments. Has Sun attracted market share from them, or has Sun widened its agency network? Any color on whether this volume is recurring? Shanta, maybe if you could answer that question.
Yes, Hassan. Yes, actually, there are a few key reasons for us to have a 28% volume growth. One is some of our new products have been launched, like with our principals like Galderma and some of the other pharmaceutical products that we planned. Some renewals have come through, which we were out of stock. Some new products have come in. So that have supported during the quarter 1 compared to the previous quarter. And also, I think the overall industry went through quite a challenging June last year due to the price gazette being introduced with a 16% reduction in the gazetted products. So that dip also had an impact on us having a growth. I think from an industry angle, most of the pharma companies would have had the same level of growth, but we would have had a little bit of more growth than some of the other players due to our new product launches in Q1. So those are the key few reasons for us to be better in the Q1 compared to some of our leading other competing companies.
Thank you, Shantanu. Hope that answers your question. I'll move on to another question from Adam. Can we get a slight commentary on what is happening with the plantation wage gazette? Maybe Vish, you can take this.
Yeah. On the gazette, the government issued a gazette on May 21st, asking the plantation companies to pay a day's wage of 1,350 from the 1,000 basic wage and an additional 350 rupee allowance for a total of 1,700. But then I think the plantation companies took the matter to the appeal court first and then on to the Supreme Court. And the Supreme Court has given a stay order that the gazette is not valid in law because the 1-year term has not completed from the last time around when the wages board met and issued the wage gazette. Therefore, the Supreme Court has now requested that the original wage of 1,000 to be paid until otherwise final decision from the Supreme Court is given. So that is where the current gazette, as per the wages, is there. I hope that answers your question. We take the next one.
Yeah.
What is the current milk yield per cow per day is from Varnakula Surya Dilshan, I think. Currently, we are ranging around 19 liters per cow per day.
Thank you, Vish. A question from somewhere. What kind of growth is anticipated in Sunshine Healthcare segment following the IFC investment of 3.27 billion in May 2024? Will the entire investment will be allocated solely as capital expenditure?
Take care. Thanks, Asanta. So on the IFC front, I think we are working through the last stages of the CPs to conclude that transaction and to actually get the funds. In terms of growth, I think we won't be able to give exact figures, but I'll give you broadly where we will deploy it. I think, as Shyam mentions, the bulk of it will go into our manufacturing plant, in the manufacturing, to expand its capacity specifically on the MDI. And also, not just capex. I think we will be investing in working capital also to accommodate that enhanced capacity going forward. We are also investing in medical devices and equipment, hospitals. So that will expand the medical devices business and enhance its growth going forward as well. Plus, we are doing some work on the distribution side. So strengthening our warehouses and logistic chain so that more product can flow through that system, so that will enhance our ability to take on new stuff going forward. So broadly, those are the three verticals that we're going to spend and the growth will come from. I hope that answers the question.
Thanks. Yeah. Move on to the another question from Tarushi. There's a 58 million provision for slow-moving inventory in your cash flow this quarter. Yeah, this is somewhat higher than what we have seen earlier in Q1. Any reason for this? Maybe Arun.
I think it's I don't clarify whether it's in the holdings one.
Okay.
It's in the holdings.
Yes.
We'll get back to you on that.
Question from Amrit. What is the current capacity of the pharma manufacturing business, and will it continue to increase this year? Sayandan, maybe you can give a broad idea about the capacity.
Yeah. So we have 6 lines and different lines at different capacities. MDI being the highest utilized capacity this year, which has come almost up to 90%. But if you take the tablet and the capsules, we are at about 40, and the device and the cream lines, we have a lot of capacity. But having said that, yes, MDI going into the highest, we want to further increase the capacity. We are going in for automation, which will also give us highest volumes. So while we are focusing to be fully utilized, we are also increasing the efficiency of our manufacturing lines, which would improve our capacities.
Thank you, Sayandan.
I think we have the answer for that, Aruna.
The slow-moving inventory provision is mainly accounted for some of the field inventory at dairy farms. So we made a adequate provision for the period.
I hope that answers your question. Another question from Tarushi. Any reason for the rise in payable days for this quarter?
Actually, payable days as of 30th June mainly accounted for some of the raw material tea that we have purchased as of the day of 30th June, sitting in as a raw tea. And also we made a provision for dividend payable, that is for the external party, because AGM approved, shareholders approved the dividend, and we made a provision as a payable.
We can move on to another question as well. Sanju, maybe you can take this. This is from Amrit. With regard to tea exports, is the recovery being driven by customers in existing region or from new regions?
Yeah, Amrit. So this comes from both, from existing plus new, but there is more focus in the Far Eastern market, mainly focusing on China. So we see growth coming from there. Of course, from the Middle East, we are having from the same clients buying more tea in terms of value added. So that is where the growth is coming from. Thanks.
Thank you, Sanju. Question from Oshan. Is there an expectation to increase the local consumer brand prices during the second quarter of 2025?
Definitely not in Q2, not in second quarter.
Thanks. Maybe Aruna, another question for you. What caused the drop in the interest expense in the quarter?
Mainly the rate reduction in quarter by quarter. So first part is a reduction in the interest rate.
Sayandan, a question for you. Oshan has asked, was the last year tender-related revenues for medical devices one-off, and the current quarter medical devices top line and margins more normalized?
Yes, the answer is yes. Last year, first quarter was a one-off higher amount, which also was a timing where we had 4 times higher. And yes, I agree with that question. It's more normalized, and we are regularized the tender income for this quarter and the last quarter.
Thank you, Sayandan. Another question for you, Anuruddha. Has there been a volume increase quarter on DNP?
Versus Q4, there is no volume increase in Q1.
Shanta, maybe you can take this one up. Another question from Oshan. What is the development with the new price formula? What are the possible impacts?
Yeah, a bit of a tricky question, though. I think so. There has been a gazette on pricing of dosage form, which is not clear, if I may put it simply, which is not clear. So we are seeking more details, and it has to have more depth with regard to the pricing of pharmaceuticals dosage forms. So this requires further discussions and further actions with the regulator. So therefore, I think we are also significantly involved as a leading pharma company with the chamber So the Chamber for Pharmaceutical Industry is taking this up with the regulators. So there's more work to be done, if I may put it simply.
Thanks, Sean, for that explanation. A question for you, Anuruddha, from Shalini. What is the outlook on the confectionery volume? Do you plan on making any price revisions?
So answer the price revision. Of course, we are not planning for a price revision, but volume, we have a couple of launches, relaunches in the pipeline. With that, we are planning to match last year volume, if not go above last year.
Thank you, Anuruddha. The question from Amrit, maybe you can take it. Can you please provide an explanation for this sharp increase in debtor and creditors?
Yeah, I mean, debtors mainly, the main component, the government debtors increase from the government supply from the devices and the Lina manufacturing side, and also creditors. I have already explained the reason for creditors from an earlier question. Yes.
So there are multiple questions from Harini. I'll go through the first one. How had been Dainty's margins in 2Q24? Maybe Anuruddha, you can give a broad sense.
We can comment on segment-wise margins, but broadly, I think it's a context of we have to be consumer sensitive in terms of value. So our pricing, of course, as Anuruddha said, has been a bit depressed with the VAT increases and are unable to pass on all of it, and us being cautious on consumer price given the sensitivity for affordability.
The question from Harini, proportion of electricity cost in the total expenses and how the margin is expected to be improved with the electricity tariff reduction.
Me step in. I think we don't disclose by segment. What I do, Harini, is we will compute for the entire group and let you know. We'll come back on.
Wish maybe you could take this question on water mature plantation extent and how will water will benefit from the lift of palm oil ban restrictions.
Yeah. So currently all our plantation, the entire plantation is in mature. If the palm oil restrictions are removed, we have the number of aged palm oil area that needs replanting, which is over 25 years, and we will probably do about 400 hectares initially.
I think the fourth question was answered from the previous question, so I'll skip that. And the fifth question itself as well from Harini. Another question from Sean. Is the dairy segment revenue drop coming from volume drop or price drop? Has there been some reduction in herd quantity from last year to this year? And is there any expectation of strengthening the herd moving forward?
Yeah. I'll answer the last part. Yes, there's new herd coming into the milking, and this is again due to timing. So that's why that we have had volume drop. Usually we like to have in excess of 800 milking cows at any given time. So this quarter particularly we have dropped down to 735. Like I mentioned, it's a timing difference. So we will have going forward newer milking herd coming in. Therefore, the milking yield also will improve with that.
Thank you, Vish. Sandan, a question for you from Salima. How large is the demand for MDIs from both government and private sector? And is it a commonly sought drug? And is the only drug manufactured by Lina?
So to answer the question, in the government sector, usually they use about 3.8 million of MDIs per annum. And the same meter dose inhaler in a private sector is around 1.4 million. So these are annual consumption. But if you take the treatment option by the pulmonologist, they use or they treat the asthmatics by using meter dose inhaler and the dry powder inhalers. So there are two choices. So doctors do select both options. And to answer the last question by Lena, we manufacture the meter dose inhalers. We manufacture the dry powder capsules. We manufacture the device to use the dry powder capsules. We have the tablets. We have the creams and the devices. So we have 6 lines. So those are manufacturing lines. So we don't stick ourselves only to meter dose inhalers.
Thank you, Sander. Question from Amrit. In the dairy segment, has the cost of feed reached a sustainable level, or can we expect margins to continue to improve?
Yeah, so basically feed, most of the feed are commodity. So as the commodity prices move up and down, the feed prices also move. So in the last quarter, we have made significant improvement in our feed. And we have made other improvements in the type of feed that we procure. We are actively procuring feed at the right optimum time. So our expectation going forward, the feed price will improve given the commodities behave on natural basis.
A question for you, Shanta. Out of the 28% pharma volume growth, how much from this comes from new products? What is the contribution from new products to overall 28% pharma volume growth? Any new principles added during the last 6 months?
Yeah, actually, there are principles being added during the last 6 months. However, but we have not seen the portfolio coming through because some of the products are on registration process. However, I don't have the number for the breakdown of the growth coming from new products. Right now, new products contributes to about a very healthy 8%, closer to 8% in the revenue in the Q1. So I hope that gives you an idea where we are. I don't have the growth numbers on split of those.
Thanks, Shan. Question from Deshan. Are there any strategies the company will follow to overcome the declining demand for confectionery goods?
Yes, actually, overall, if you look at the confectionery category as a category, category is growing in terms of volume 11% and value 12%. And this is mainly coming from hard-boiled candy and centered gum. So we have strategies in place for both hard-boiled and centered gum to capitalize on the growth opportunity.
Same question on palm oil prices.
Question from Tarushi. Given that the palm oil prices have stabilized from drops and showing some positivity, is the current level of EBIT margin sustainable at least for the coming 2 quarters? What is your view on palm oil going forward?
Volume
going forward.
Yeah, so we expect the EBIT margin to continue at the same levels. We don't see any huge drop on prices because the international prices are quite steady. And the volumes also, like I said, we have had a seasonal drop in the first quarter. We see crop moving up during the second and third quarter.
Thank you. I think that's all the time that we have allocated for the webinar. For whatever the remaining questions, we'll try to reach out to you guys and provide answers to those questions individually. So on behalf of Sunshine Holdings, I would like to thank everyone who's joined for this quarter's webinar and hope to see you all again in our next quarter webinar as well. Thank you and have a nice day.
Thank you.
Thank you.
Thank you.